All right. Well, speaking of high risk, it's funny with Bitcoin nearing all-time highs and what is it? Bitcoin nearing all-time highs, Nvidia still up high, MicroStrategy soaring, Russell 2000, what is it, 3% away from all-time highs, S&P, all these different things. The Trump trade is in full effect. It can be easy to ignore some of the warning signs that we're seeing floating around. One of these warning signs, I mean, I'll touch on the sensationalistic one over here, which is Warren Buffett and Jeff Bezos selling assets. So Warren Buffett has sold basically a heaps amount of Apple stock and Bank of America, and as well as Jeff Bezos selling a bunch of Amazon stock. And what's
Mhm.
interesting here is not that they aren't also buying back other assets. The issue is that they are they're not net buyers, and generally speaking, Warren Buffett and or at least Buffett specifically is usually buying all the time, like net buying. And I think he even has a quote. You'll correct me if I'm wrong. I know you're more of a Buffett fan than I am, but he says like I don't sell. So to the effect, I don't sell the stock,
It's
like
not
I
that he
don't net
doesn't
sell.
sell. I've actually studied Buffett for a very long time. As I have mentioned here on the show before, I started my whole career in value investing, studying value investing from Aswath Damodaran, and really considered myself a Buffett disciple for a really long time before I even got into trading. He does sell. He'll turn over positions, especially when they need to raise capital in order to make another acquisition. I think it's more than likely that the massive cash holding that they're sitting on right now is likely to buy a very, very large company. When Buffett wants to buy something huge, he needs to, collect enough cash in order to make that kind of investment, in order to buy the entire company. For the most part, he's had, less than 10% ownership in many different types of companies, but he has made significant full out acquisitions in the past. And I think it's very likely that it's either his concerns about most equity companies out there being overvalued at the moment, just from a price to earnings perspective, or he's looking to make a huge purchase.
Or he can see that something's happening with the fundamentals of the market and that the market's going to take a big tumble.
Yeah, but that's not usually his strategy, is my point. He's not a big, hey, I need to sit in cash to avoid this downside. He tends to invest in companies based on his belief in their 10-year horizons, their 5-year horizons. So he's not as interested in short-term downturns in the market. That would actually be more of an opportunity to buy more with the cash that they have on the sidelines. The activity on the sell side tends to be about whether he believes his positions are overvalued and it's a good place to exit those positions in order to buy something else. But he's usually always looking for something to buy.
So, all right, let me point out a couple of things here.
My take on Buffett is definitely that I believe there's likely a larger acquisition coming up. We just had the 13Fs come through for the most recent quarter, and some of that included Berkshire Hathaway's purchases. And I know that they had purchased a little bit more of Sirius. Let me pull up their buys. So Q3, they made a small purchase in Domino's and in Pool Corp, a little company called Heiko. And I know that they added considerably more of their holding into SiriusXM in quarter two. But I think the big question is, what are they sitting on cash for? And I'm not sure we know yet.
So, two things concern me. One, the dollar won't quit. Okay, so the dollar. Let me just pull up a chart here because I think it's worth taking a look at. It's
107 now.
it's bananas. I mean, what is going on?
I think we're going to hit that target you estimated.
That's right, and way faster than I'm comfortable with. All right, so actually, let's go and do this one. All right, so I've talked about this before, where this is my long-term support level down here. And we touched it. So this is 2018, 2022, skyrocketed. And now basically the floor that we've been under was the ceiling before. All right. And I was really hoping that this break, that we would actually head lower, because that means it's a relief for the financial system. And I could make a lot of money on the downside. I should have put that first. Me making a lot of money, then a relief for the financial system, and then a rise up for the dollar, because a rising dollar means that every other country but the United States has to scramble for dollars. That's what the dollar is going up. Countries have to scramble for dollars. And the sharpness of this move is reminiscent of significant stress within the global financial system. And where we bounce from, this is what always makes me nervous. When we bounce from one of these levels, it means that there's plenty of volume to push us up to new all-time highs and even further. And so if we take a look at this long-term channel here, we can totally see how we could get up here. Like, we absolutely can get up here into the 120 range for the DXY. Which,
and for context on time here, the last time we've seen the dollar that high was about what, end of 2000 there?
Well, because the charts are not weighted for what's happening at the time, it's more about the magnitude of the move versus the mean versus any nominal level. And so over here, for example, this peak over here was the COVID crisis. So we spiked up. Here we had Brexit, and there's China deval that was happening within the currency. These peaks were at the financial crisis when we didn't know what's going on with the GFC. So you get these peaks at difficult times within the financial system. And so if we're headed up to a new peak, that means we're headed up to a new difficult time in the financial system. Other than that, it's the yield curve. So we have here, if we take a look at the yield curve, the 2 and 10. All right. So what happens is that when the yield curve inverts, usually we have about 6 months to 18 months before a crisis happens. Actually, let me just set up a chart here a little bit better. Let's do 1 second. We'll do 10s 2, and we'll compare that to the S&P. And then we'll put a line at 0. Yeah. All right. So this line over here that we have is at 0 for the spread. So when this chart, the 10s 2 is below that line, the yield curve has inverted. That means the long-term yields are lower than the short-term yields. And when it goes back up, we've uninverted. So when we invert, that's usually a harbinger for bad things coming. Usually within 1 month to 18 months is where it usually occurs, usually around 6 months. And so you'll see over here, when it inverted, that was essentially near the peak of the S&P during the last cycle. And then we had a downturn. It inverted over here a little bit 30 days before the crash in COVID. It got close to inverting during the whole Volmageddon thing in 2019. Basically, we don't want the yield curve to invert. That's usually a bad news. But the bad news actually starts when the curve uninverts. So like the clock starts with the inversion, and it's when it goes back above that the problem really starts to happen. Do you see that here?
Mm-hmm.
All right, so here we uninverted in September, which, if you remember, coincided with the Fed cutting two cuts basically in one. Remember, we were asking, why would the Fed be all of a sudden cutting twice, all at once, acting super cash, very Michael Saylor-like about MicroStrategy. And it happened right around the time where the yield curve uninverted, which makes me think that they also knew, some difficulties ahead. And we're actually now flirting around this inversion level. So if we invert too many times in a row, that's like a consolidation for bad news. Like it builds up, and I think the last time we had something like that was um, global financial crisis, and then before that we had that in the dot com era. So it's not good when the spread is fluctuating around the inversion level, which is what we're getting over here. We really want this to blow past. And then also when we take a look at the ISM, let's go here. PMI manufacturing. I would have expected the ISM to be rising here, to be like halfway through a healthy cycle, but we're not. We're like middling. We're not actually moving forward in the way that I would expect. I would expect something more like these moves up, and we're not getting that. So all these things makes me very nervous as to what's actually happening within the financial system, and to me portends that at the next window of weakness, which is should be mid-January to March, that's where I'd be looking to like play shorts and be expecting tops and all these different things. I just want to show one other thing here, and that is over here. I thought this tweet was pretty interesting. So as fun fact, SPX is on course for 20% in 2 consecutive years. This happened just 4 times in the past 150 years. 3 of those times, returns in the following 2 years were negative. The one time, 1997, 1998, it turned into dot-com bubble before hard crash. So obviously these are just anecdotal past performance, not indicative of future performance. But when I see these things building up, and I see a bunch of euphoria within the market, which is, I mean, Mike, are you feeling the euphoria? You don't even have to be in crypto to be like all excited about what's going on in markets.
This is the moment I wait for, where I'm just hanging on, hanging on, hanging on. So yes, the market euphoria is fantastic right now.
That's right. And so that's where I go, okay, we got to prepare for the downside, wait for the next window of weakness. We have to get past the December window of weakness, which makes me nervous. But whatever, it's Christmas. I'm not going to think too much about it. But then come February, I'm really going to be nervous. So that's my Buffett and Bezos plug here. Follow the billionaires, follow the money, follow the oligarchs, follow the elite, and all the days of your life will be good.